Let's talk about bank statement loans. When you're buying a home, and I should qualify this, like if you're self-employed and you're buying a home, we can use bank statements to verify and create an income, a qualifying income. So understand I said the word qualifying income. I'm not just creating income out of thin air. So a bank statement program, it's great for the self-employed because as if you're watching this, you may be self-employed. Self-employed individuals oftentimes get real aggressive, whether it's on purpose or intentional at the recommendation of a CPA. They have a lot of write-offs. Some are probably very, very valid. Oftentimes they may take little liberties and get real aggressive, writing other things off, and just do their best to have the bottom line get really close so that they don't have to pay an excess amount of taxes. So if that's their choice, good for them. I'm not here to pass judgment one way or the other. So again, I'm self-employed to some degree for other projects and things I do outside of the mortgage world. And we certainly take advantage of the write-ups we earned and we deserve. I'm not one that's going to get too aggressive personally, just because I don't need or want the hassle of ever getting audited. And I don't mind paying my taxes. I think, quite honestly, happy to pay taxes. I know that sounds weird, but God bless our military. They need and want the money. I love having roads and interstates, and I just appreciate what it is. Certainly, would I like to have more of my money in my pocket? Of course. But at the end of the day, it's in a weird way, I think of it as a charity, so it makes me just feel better. But all that's to say, bank statement loans. So the reason why I go on to the self-employed and talk about those write-offs is the cool part about bank statement loans. That's how we create the qualifying income. So let's say a business owner, we're going to give this pretend business owner a 10 grand a month of deposits. Their revenue is 10 grand a month coming in the door. So with tax returns, they may show that okay, now they had $100,000 of write-offs this year. So that annual $120,000, the 10 grand a month, the 120 grand annually gets reduced to 20 grand of income. Well, 20 grand of income is going to be hard to qualify for anything in the mortgage world. However, using bank statements, we can use deposits, and there's a couple different ways to do these calculations. We won't, I'll put some other details, about how to do that. But fundamentally, just understand we're going to take those deposits, and we may take a percentage of those deposits. Let's just say 50%, right? So there's different types of programs that allow you to do different amounts. Let's just say 50%. Well, now if we say okay, there's a 10 grand deposit, and we see that that's kind of been historically accurate, we can then take 5 grand a month of income if we take 50% of that ratio. So how much of that ratio we can take, again, depends on the program and what you do. And obviously the rates will change. They are higher interest rates because there's more risk to an investor, or I say investor, that's my speak, to the mortgage lender, right? Whoever we're taking this to whatever investor wants to buy this loan. Again, they're going to have different calculations. And so again, your CPA, and I know it seems weird, but your CPA may need to get involved to help us determine how much of that deposit we can use, like what percentage or what ratio we can use. Again, we'll put more details down below. Credit's got to be good. Again, got to be self-employed, got to show these things. But the benefit, the advantage of this is you avoid having to show us your tax returns. We don't care what you do and don't done. So I don't care if tax returns have even been done, right? So it's one of those things that this really streamlines the paperwork process, makes it easier because I don't need to see the tax returns. I don't need to wait. I need to get those filed and done so we can use the income. It's just showing this. And so the bank statement programs, in most cases, they're going to offer a 12 and 24 month option. So give me 12-month your bank statements or 24 months. So just make sure you check, commingling of funds, like, hey, it's a personal account with money coming in and out. That's going to be different than if it was just a true LLC. That's all that is business deposits coming in. So again, they can get tricky, but certainly we're here to help, and they're awesome, awesome outlets to help folks buy homes. So reach out to the Mortgage Market team if you have any questions. We certainly would love to help you with those. And just remember, as always, when you think mortgage, think Mark.